All right, morning everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays. Coming to you once again with another guest. So let's go right ahead and welcome Joe Saz back to the show. How you doing, Joe?
Excellent, Tone. How are you?
All right, how's the new cigar room over at your place going?
It's great. I got a nice little dining area. I got a nice little chat area over here. I got my computers. I got my multi-monitor setup. I mean, this has really turned into a home away from home. So I don't know if that's a good thing or a bad thing.
I know. I gotta keep apologizing, man. I've been meaning to come over to your house and like enjoy the amenities, but we'll get there. We'll get there. One of these days, I won't be traveling every 5 minutes.
Yeah, yeah. Seriously.
All right, cool. So you've been trading. Haven't had you on a show in a long time. Hearing a lot of great things, and you showed me offline a demo of another indicator that you're now using, and we're gonna talk a little bit about that. But how's everything been, man? How's life the last few months?
It's just been really good. I gotta say, it's. I'm sure you understand, like when you're getting into something, you got your hands into something that really has you excited. My order book analysis has been something that's kind of elusive to a lot of people, and it was great to meet up with the founders of this product and to start using these visual cues to build a better understanding. So it's just been a lot of work, but I've been loving every second of it. So life is good, happy, healthy. Uh, got my cigars, got
Yeah, no,
my
I know you gotta get. I don't see a cigar, man.
yeah.
I know you got one around there somewhere.
Yeah, no, I was lagging a little bit. Let me get this thing lit. But yeah, I gotta say, man, I'm happy, Tone. It's great, and haven't seen you in a good bit, other than the bathhouse. Which honestly, I felt better after the bathhouse at like 11 than I did before, going to it. So I mean, man, we got to get back into that.
Yeah, guys. That's like one of my relaxing activities is trying to find like a Russian bathhouse. It doesn't have to be Russian; it could be a Korean bathhouse. It's got to have like a nice hot sauna, something that has to go 90 plus Celsius. That's a real sauna. You got to find one in your area. It's freaking incredible. That's how you got to relax. All right, guys. Without further ado, let's go over the screen share, and you know what? We'll just start with wait, which screen am I on? Okay, hold on a second. Before I go to screen share and screw this up, there we go. And there we go. Here's Joe Saz's Twitter page. Go ahead and check that out. Hey, you're up to 3,000 followers now. Nice.
Oh, nice.
And still on Block TV.
Yep. I pretty much Block TV did make a shitcoin, and I'm very upset about that, and didn't hold back any words there. But I pretty much made a decision: either I leave, and some shitcoin fuck comes in and starts, shilling all this garbage, or I stick around until they, decide my Bitcoin maximalism is a little too toxic. So that's pretty much where I stand. I would rather me be the one talking shit about shitcoins than Bitlord shilling $10 XRP or some shit like that.
Yeah. Well, speaking of, so we're putting out votes. By the way, guys, you can go ahead and vote for well, it almost made it. The Block TV token almost made it into the category of best new scam. We haven't released that category yet, but there is a category of best new scam. But too much competition. They released it so late in 2019 that they may be eligible for best new scam of 2020. But check it out. Voting is open. The Twitter fan vote is only a third of the vote. The other third of the vote will be by the attendees of the Unconfiscatable conference. And the other third is, I probably shouldn't say it, but there'll be another third allocated. It is going to be very fair voting. So we've released three categories of 9 or 10. We're still deciding how many we're going to do. And we will have a little award show. Man, Peter Schiff is running away with it. Peter Schiff is running away with the most coolest no coiner. I did not see this coming. I really thought that Rubini or Paul Krugman would do well. We have Wow, MoneyGram is running away with the most clueless Fortune 500 company. And this is a tough one. Oh, wow. Richard Hart was in the lead. So Craig Wright started off. I didn't want to skew the results, so I voted for Justin Sun. Craig Wright was in the lead for Scammer of the Year. Early out of the gate, Richard Hart was crushing him by 10 percentage points. And now it looks like Craig Wright is coming back. You know what? I kind of want to retweet this one.
Yeah, that's a good one.
That is no. You know what? I'll do it later because right now my latest tweet is this show. We'll do it after the show. But yeah, so we have other categories, including the Lifetime Scammer Achievement Award, and there's really good categories, man. It's going to be awesome. All right. Speaking of which, it's part of the Unconfiscatable conference, which Joe is coming to. Joe, you will be at Unconfiscatable.
Yep, I'm looking forward to it, man. I if I could, I'd get on a plane right now and be waiting for you.
And you will also be at the Financial Summit in the Dominican Republic.
Yeah, I actually plan to release. So we're going to go into Trader later, but I want, I'm going to be releasing an exclusive strategy to the attendees at the Financial Summit. This technology is cutting edge. It's brand new, never before. Like I've had tons of people come up to me and say, order book analysis can be done. I've never seen it get done in terms of making it visual. So I have now visual cues that I can explain to people. And it's just going to be so fantastic. I have an amazing presentation coming, and it's going to be a killer strategy coming along. I really look forward to that. And I think anyone that goes there is going to be really, really pleased that they went.
Yeah, no, the event in Bali was absolutely incredible, and I can't wait to repeat it all in the Dominican Republic. Speaking of Trader, we're going to talk more about this later, but there is a link in the video description. We're so busy with the graphic design for Unconfiscatable. I have not had a chance to add the Trader registration site to my affiliate page. There's room for one more. We're going to stick that in probably in a day or two, but for now, you can, this is Joe Saz's YouTube channel, but in the link to the video description, after you guys subscribe, of course, check out a link to TRDR, which stands for Trader. I do have an affiliate link, so please support, and you will find out what this is. It's not an exchange. It's basically a way to access order book data in a very visual, graphical way that has been doing wonders for Joe's trades. So speaking of which, let me just take a quick peek at the markets. Actually, let me take a quick peek at what's going on with the coronavirus, because this one is really running away. I said it a few days ago. We've spoken to some doctors, done some analysis, and the peak in infections should come late April, early May. So for now, the numbers are rising fairly quickly. 67,000 infected, 1,500 deaths. That is a pretty damn high percentage. And yeah, you can see the world map here of infected. Clearly, China is the main area. And lots of cases in North America as well now. So you just got to be careful, guys. Got to be careful. And stay healthy. You know, if you're healthy, it's not going to kill you. It'll just make you sick for a little bit. All right, let's go to the charts. I'm going to take a peek at my weekly and daily so that I have an idea of what I'm thinking. And then I'm going to hand it off to you, Joe.
Yeah, sounds good.
So here's the weekly scale. The week, when we're now on Saturday, the week is about to roll over. We have a positive weekly candle. We have a little bit of a shadow at the top. It is a 6 of 9 on the sequential, which means we are still pretty good for 3 more weeks of upside. Now, the 9th candle is always tricky to trade. Let's take a look at the last 2 9 sell candles. You can see the last 9 candle was a big down week that was preceded by a reversal candle on candle number 8, which is the complete opposite of what happened the prior time we had a 9 sell, which was a monster breakout to the upside to the tune of like a 25% up move in a single week, more than over a 25% up move in a single week. So these 9 candles are usually very, very tricky. Here's the last 9 that we got, was in the opposite direction. This is a 9 buying opportunity, and the range of this candle was like 35% of the price of Bitcoin at the time of from the bottom of that candle. So the range of this candle goes from 73 all the way up to 10,300. So I learned to pay attention to these nines because they tend to be very, very interesting. And for those that are seeking volatility, could be very good trading opportunities if you can get it in the right direction. So right now, we also have a deferred countdown, which in order to complete the countdown, we really need to get to that $11,000 mark. So we will see if we can get there. I think it's pretty possible, considering the weekly is still bullish. I will also take a look at the daily from the TD perspective. And here was my last view on the price of Bitcoin when we did not go down. I was basically more bullish than bearish. You can see the green arrows upon the breaks of resistance. We went straight through the last level of resistance. There's really nothing stopping Bitcoin at this point. We have broken this downwards channel. There's no reason but not to be bullish right now in Bitcoin. Is this going to be bullishness that takes us to 40,000 and beyond? We don't know. We will find out. Right now, the sequential is still positive, but a 9 daily is coming. Sorry, this is a 3-day. My bad. The 3-day is only on a 7. The 3-day chart, which a lot of people like, we were looking at it yesterday with Phil. That one is coming in about 2 candles. I thought the daily 9 was yesterday, so this chart looks very strange to me. Let's look at that daily. The daily 9 did take place 2 days ago, and we're dealing with the 1 to 4 candle correction or a break in the action. This is consolidation at the top of a run-up, which means this is making me pretty bullish right here. All I need is a green 2 above a green 1 above the tops of these candles, and it's all systems go for at least another couple of weeks until that weekly 9. So what I am looking for is a break of this line, and in a perfect world, that break comes with a green 2 going above a green 1. We are dangerously close to the stop and reverse points. So tomorrow, if we have another day of consolidation, we'll probably hit the stop and reverse point, which indicates a short trade. I don't know if I would take on a short trade right now. I would rather take on my short trade as it's going below 9,000 than take it on the short trade here. Again, these are continuation trades versus trying to time tops and bottoms. On this note, I'll glance at the S&P 500 later. On this note, let's hand the screen share over to my man Joe, and let's see what he's got. You want to talk about the bigger picture first, and then we will jump into the shorter term order book analysis, because those trades are on a slightly lower time frame.
Yeah, so let me just start with my screen share. I'm going to move out of Trader, and I want to point out real quick, Trader is in beta phase. You get, if you sign up right now using Tone's link, you're going to get a free access to a pro membership until beta ends. This could be till the end of March. So I would strongly encourage anyone who's just curious to pop your head in now while it's free.
Yeah, I got to be honest with you guys. Like Joe was showing it to me. It's not, look, everyone wants to get me on like a call. They want to show me their stuff. And it's not easy because it's not easy to get me like alone and concentrating on this kind of stuff. And I keep a screen share on, Joe.
Okay.
And Joe was able to do that. You know, Joe got me for like a good hour and change and was showing me exactly what you saw on the screen with those with the red and the green colors. And I understood it fairly quickly. And I'm like, oh shit, this is actually pretty cool.
Yeah. Yeah, it really takes a lot of the work out of trying to decipher all this. So in long-term picture, this is actually something that I feel like not too many people have been discussing, and I find this to be very interesting. We have so I've been following the CME gaps. We have about a $15 and a $35 gap down here at 85.40, 76.85. But we've had pretty much the longest gap that I've seen all the way back here. It's between 11,000 and 11,695 and 11,795, and we're going on to the 186th day. of that gap being open. So I actually think 11K is on the table. So this is my macro picture. I think that these smaller gaps are less likely to be filled. I think that this gap is something that should be talked about a bit more, especially as our distance from it closes. Do you have any thoughts on this one, Tone? I can assume.
I personally have not been paying attention to the CME gaps. I know people make them out to be something really important, but I'm not yet convinced that the CME gaps are all that important, considering that we do now have gaps over on that low side. And if those gaps never close, then this whole idea that gaps always close is, is a failure, right? So, and to me, this obsession that gaps have to close is very dangerous for traders. Now, gaps close most of the time, but your trading strategy cannot depend on being 100% certain that the gap is going to close. There are and Joe, you took one of my courses long ago. You took the and you know what I said in those courses where look, gaps do close, and there's a reason why gaps close, but there are runaway gaps and there are gaps that close. Now, runaway gaps usually happen to be upside.
Yeah, that's what I would say. These
Right.
probably are, right?
But those aren't big. But the one thing I will point out is there is two ways to draw those lines. So if you are really gonna be literal to the definition of a gap, right? Those white lines kind of need to be drawn from the close of candle, not from the top of that candle, because the gap takes place over the weekend. No, all the way up the other way. Yeah. Right. So you have the white line drawn from the shadow, but you should think about putting that line at the close of the body, because that's when the weekend closed, right? And now there is a little gap there as well. And that also means there is another gap further up right there. Exactly. Okay. So you could look at it from the point of the shadow, but you should also consider it from the point of candle body. As long as you are consistent, if you're going to always do the top of the shadow, then always do the top of the shadow. I personally think that a true gap is from the top of the body, not from the top of the shadow.
Interesting. Yeah, so this is just something I'm not a gap professional either. I've just been paying attention to it since so many people have been talking about it. And I ran it back. I found this one, and I might have found a couple others that might be gray area. But macro scale, that's one thing that I'd be curious about. I would be looking for this. Obviously, confirmation bias can get in the head of any trader, right? But I would say that if we're talking gaps, this is a pretty significant one relative to whatever we have going on down here.
Yeah, but the same thing goes for that one, right? That your gap at 11,000, that you got to put that at the close of the candle's body, because that's the true gap. So it's got to go at the top of the green body, right? Because you're using the low price that took place earlier.
Mm-hmm. So a little bit bigger of a gap.
11. Oh no, that's the thing. It's actually is bigger. It's the top of the green body because it was a bullish candle, right? That's the actual.
Oh, that's
gap.
the close.
Right, okay, that's the close. That's the actual gap that took place. So it depends on how you do this analysis, because a lot of people talk this stuff, but they're not like thinking about it rationally. It's like, oh, gap. They don't even know but if you really think about how big that gap was, Friday close to Monday open, that's the gap from the top of the green body to the top of the red body.
So let me ask you about this very technical one down here. We have a body close here and a body open here.
Correct. That is a gap, but right, there's a tiny gap. But in this case, your gap is between the body, where the red body closed and where the bottom of the shadow was, right? Because that's the attempt to close the gap that didn't make it. So you're going from the bottom of the red candle body to the bottom of the shadow of the green candle.
Got it. So that's about a small gap.
Right, that is still a gap. So basically, everyone talks about how the CME gaps close, and I guarantee you, if you put a microscope, more than 50% of these gaps never freaking closed. So It is just something people like to say and pay attention to. And this is why I always said I don't think it's very significant. Like you put a microscope on every single one of these gaps and you'll realize at best you're 50-50.
That's what I did was I brought out the microscope and I was like, man, this is kind of weird. So I hear exactly what you're saying. Close to open. And yeah, maybe if I was to put all my lines back, I would find that the percentage might be closer to 50-50 than a 90-10 or something like that.
Well, I'm sure it wouldn't be 50-50. I mean, remember, like markets are volatile. Markets are always going up and down. We had a a full year bear market where we fell 85%. So every single gap from 2017 was pretty much closed.
Yeah.
Not every gap, but like the second half of 2017. So when you have, this long bear market, you're going to close all of your up gaps, and eventually you're going to have a bull market. You're going to close all those down gaps. There'll be another bear market. How low will the next bear market go? It depends on how high we get. If we make it to that $45,000, $50,000 range, I think we can fall back to about 10K. So we'll close every single gap along the way.
Yep.
But eventually, right? Like, I mean, I don't want to have a trade and waiting 4 years for my gap to close. I mean, that's not how trading goes.
Yeah. I couldn't sit that long on a hoping for a $3,000 Bitcoin again.
I mean, my view is this, right? If your weekend gap doesn't close within the following week, forget about it.
Interesting. All right. Well, thank you very much. I was actually waiting for someone to kind of help me out with a deeper understanding of gaps. So my last little bit.
Oh, sorry. Go back to that.
Yeah.
Now that my statement isn't always going to be true. Like immediately, my eyes focused on the end of October, where there was a giant CME gap. End of October off the green candle, right? That was a Friday. And then Monday, you get that enormous gap. And that gap did not close the week after, but it closed early on in the following week, right?
Yeah.
So, I mean, even my statement isn't always going to be true, but also that's an exception, right? That's not a normal gap.
Yeah.
That's a monster, right? So,
yeah.
I mean, yeah, and then the same thing. My eyes immediately now gravitate to the prior August, where you also have an enormous gap and it runs away and it doesn't close. Or other August, sorry, the bear market August.
Yeah, I noticed you got a question here too that you might want to get.
If you go to 2019 August, Joe, no 19, you're going into 18.
Right here.
Yeah, the 20 and zoom in on that. If you go to the 2019 August, you have a huge breakaway gap. No, before that one. Yeah, you got a huge breakaway gap there, and then that gap closed like 2 weeks later, not a week later. So maybe you can extend what I said. But that gap did close, but it left another one that still hasn't closed, right? And it's been over. It's
like 180. Plus
yeah, it could be a year before that. It could be tomorrow, but it could be another few months before that gap closes. So we'll see. I don't know. I personally, I can't possibly see a great trading strategy revolving around the CME gaps. But hey, if someone comes up with one, all the power to you.
Yeah. Hey, you got a nice tip here and a question. Do you want me to read it out to you?
At the live chat, I've been looking at your screen. Let me pull up the live chat here.
I can read it out to you if you want.
Yeah, go for it.
Seth G asks, Tone, are you considering the stance that we can't have another real Bitcoin bull market if the shit coins are pumping as well?
Okay, that's a very good question. You want me to answer it first, Joe?
Yeah, sure. I have an opinion too.
Okay.
We can debate
let me just read that question one more time from my end. Are you reconsidering the stance that we can't have another real bull market with the shit coins pumping as well? So you see, notice how you threw in the word real bull market. Reconsidering, it could still be a bull market. Like the price of Bitcoin can go to 50,000, and it's a bull market. but to me, it's not an adoption. It's not a real bull market. Like, I'm not going to consider, oh shit. What happened? Did I lose the stream? Oh, we're good. We're good. I got an internet interruption here. Okay. So, is it a real bull market? Well, it depends on your definition of real. If your definition of real is only about the price of Bitcoin and everything else is irrelevant, then the answer is sure, it's a real bull market. To me, a real bull market also comes with global adoption. And I just can't see global adoption of cryptocurrency, and especially Bitcoin, if there's confusion and being misled by fake Bitcoin and shitcoin. So if we do have shitcoins rising with Bitcoin, especially if they're rising faster than Bitcoin, then it's another 2017 bull market. It's not real. It's just a price pump. Okay. Like, to me, Bitcoin is just in another price pump if the shitcoins are rising. And that's fine. That's great. I would love for my Bitcoin to be $100,000, but it's a price pump and it's going to have an 80% correction. But if Bitcoin is rising to 50,000, but shitcoins are crashing at the same time, they may not be a correction. That's the S curve. That's global adoption. That's that, that's like that move in the price, and then there is no dip. There is no 80% correction. So that's my long-winded answer. It depends on your definition of real bull market.
Yeah, I'm going to agree. I think that they unfortunately are going to coexist for a little while longer. If this bear market got much worse, instead of that October 25th pump, we had an October 25th dump where we went down, from 7.3 to, the exact inverse of that would have been to like 4,300. And then, say we continued lower, this could have easily been Litecoin death. This could have been numerous altcoins dying. I don't think that we need altcoins to die for Bitcoin to have a bull market, but yeah, it is a bubble, I would think. So that's kind of how I'm seeing it, is that it's going to be bubbles popping until more and more altcoins die.
All right. By the way, the product that we were talking about is order book. It has nothing to do with gaps, guys.
Yeah.
Gaps is just and Joe will be first to admit that you're not a gap trader, man. You're just keeping an eye on those because everyone is talking about it. And I basically kind of just explained, along with Joe, that 80-90% of the people talking about gaps in CME have no fucking idea what a gap is or how to trade those gaps. And because everyone is talking about it, Joe has been kind of keeping an eye on it. He threw a chart on. I tried to explain it because, look, gap trading is a specialized form of trading. I've attempted it in the stock market. It could be very profitable and it could be very annoying. Gap trading is very specialized, and 90% of the people talking about gap trading with CME futures, they have no clue what they're talking about. I bet you they're not profitable. You can't, I don't think, I've looked at the data and I don't see how you can come up with a good strategy on it. But if you have, great.
Oh, I actually agree, because I think that 11.7 is got to be an anomaly. That's the longest standing gap, and I guess technically with the good range that we've had. So I was looking for the anomalies because everyone was talking about it, and I was like, well, I want to really figure out if this thing, because the first thing I'm inclined to do is look for the holes in the picture, right? So seeing that 11.7 gap and seeing the longest one having taken months to get filled, that one half a year. So anyways, yeah, that has nothing to do with trader. We can get there here. Sure. And this is because I'm also partially asking about your opinion while I have you here. I know that you're a fan, or are you a fan of bullish crossover proximity to price?
Oh, very much. Again, that is something that I teach at the workshop as well. Like this bullish moving average crossover that I see on your chart right now, that means, it's great. It's both of those, right? So the short-term moving average, whichever ones you're using. Looks like
I'm going 50, 128 in purple, 200 in blue.
Yeah, that's exactly the ones that I'm using. Those bullish moving averages, they're pretty cool. They're good long-term, but they're completely useless for a short-term trading because the price is so far away from it. It's kind of like utilizing that depth cross. You see that depth cross between the 128, the purple and the blue that
Yeah.
took place
Yeah.
back in like November or something like that.
You
Right,
sold the bottom.
right. That depth cross is totally useless because the price is so far away from the depth cross. So if the
Mm.
price is so far away from the depth cross, usually the most likely outcome is the opposite of what that depth cross represents. Because the price is so overextended, it usually bounces into the moving averages. That is the same thing here. Like the long term the long term view on these golden crosses is that price should continue to go up. But the short term is that because the price is so extended, when the cross happens, that the price is more likely to pull back into the moving averages. Now, in this case, I saw that depth cross between the 128 and the 200 as very bearish for the intermediate term. Clearly, I was wrong on that because the price rebounded not only into the moving averages, but broke them all. That is a very rare situation. But if it's rare and it happened to the upside, it can also happen to the downside. But all these assets like Bitcoin, they have bullish skew. They are very bullish biased. Can we pull back into the moving average? Yes. Are we more likely to break that moving average to the downside, like we did to the upside a few months ago? The answer is not as likely because the halving is coming, and obviously money printing is happening and all this other stuff. And the gambling on the shit coins is back. So there's lots of reasons why Bitcoin is way more likely to go up from this point than down. But that moving average crossover, because it's happening so far away from the price, is almost irrelevant.
Yeah, and one thing I like to add, because this is something that I notice in Bitcoin. I like to, I call it sprinkle some pepper on my analysis, because Bitcoin tends to act so irrationally that if you are only focusing on a rational analysis, then you might be able you might be getting wrecked. So I always encourage people to have a little bit of extra a little layer on top of their existing analysis that includes an irrational outcome. So Bitcoin really does tend to surprise people. So I like to add that to my analysis method. Um, but yeah, if you're ready, I'm ready to hit trader and start breaking down what it is and the.
Before trader, just give me your outlook on Bitcoin. What are you thinking now? Because you were in a similar camp to me, more intermediate term bearish, but now the picture is changing. So what's your like daily, weekly view, and then we'll dive into trader.
Yeah, it's funny. So this is an ongoing thing, right? A lot of people say it's the larger time scales that dictate the general trend, right? And I kind of feel like after spending the majority of my trading career on small time scales, I feel like that's where I can see the subtle nuances that define the general trajectory of the trend. So I usually don't start big. I usually start small. I looking at this, I agree with you. This is consolidation, and not only that, this is consolidation above 10K. This isn't a flimsy ass consolidation where we're poking our head above 10K, fighting for five figures, dropping back into the four-figure territory, really erasing that positive psychology associated with 10K, which I believe is essential for us to get a little bit more excitement and FOMO into this bull run. So I'm happy as long as we keep bouncing off of an area above 10K. That's going to make me very, convinced that 11K is next, 10.6 probably before 11K. Because, of course, we've had our fights in the 10K. It's been pretty rough for the Bulls to crack some of these areas. So as long as we're holding 10K, I'm going to stay bullish. But we need support to chase the book. We need support to chase the price, right, in the order book. And right now I'm getting to a point, and we'll see in the charts here in a sec, where we're starting to look pretty flimsy, and that's making me feel a little bit like bulls are exhausted in this region. And if that's the case, then it's probably time to consider a closing some longs and a new entry a bit lower. But I'm not ready to make that decision yet, and I'm holding my long position. It's in profit. I'm not going to close it just yet. Not going to slam the door, but I'm definitely have a foot out the door for a pullback to maybe if I was to guess a reasonable pullback area that would shake a lot of people out of the market and then resume the trend. I would say probably the high 9,000s, but if we get down there, I can't, I want to see what it's like first. I want to see how people react. But we have been reacting quite bullish in this 10K range, and I'll show you exactly when and where that's happened. But when we're ready to move on to trader, you are getting some
Yeah,
big
no, I
push.
can see that, but a lot of them have to do with individual stock names. I want to save that till the end.
Okay.
Yep. EXC and Space. Very, very interesting. I do want to cover those, but we will cover those later. Yeah. I'll just mention real quick for John. I'm looking at the. I'll pull up the chart in a second. Be very careful with that trade. It's a trade I would not have entered, to be honest with you. It doesn't mean that the trade's not going to work out, but in case I forget to talk about it at the end, I will. Since I'm looking at the chart in front of me, I know it's not on screen share. I would be very careful with that trade. You did it with options, so your risk is limited. I will explain why I would be very, very cautious with that trade later on in the show. All right, Joe, let's wow, we were up to 600 viewers now, which is great. Hey guys, we're about to talk about a platform called Trader. I just I might as well, like, if people like it and they want to try it out, there is a link in the video description for Trader, TRDR. So check that out. That's how you can support your content creators by just using their links. It doesn't cost you anything if you want to use products that you actually like. All right, Joe, let's get to it.
Yep, let's unveil the curtain here. This has been what I've been working on for quite some time. So welcome to Trader, everyone. This is going to be a little confusing up front, so let me break this down. It doesn't matter the time scale right now. Let's just focus on these bands. The first band, as you can see here, it's missing. It's owned by the red. This is a ratio. So you're never really going to have one side or both sides controlling the order book in each aggregation. The only time that you will get that is if it's a fair fight 1-to-1 ratio sells to buys in that aggregation. So the first space is 0 to 1%. The second band is 1 to 2.5%. The third band is 2.5 to 5%. 2.5 to 1, 1 to 0. So each band covers a different distance from price, and it is a non-cumulative aggregation of those numbers. So these bands, let's look back at a little bit of history here, and this is basically the order book analysis in action. When you have the brighter the bands, the stronger the ratio of buys to sells. So you can clearly see when we pump up to these new areas, not only are we pushing into resistance, but we don't have buyers chasing the book violently and really trying to keep the price propped. But what happened is we took a run up, we lost support, or we at least didn't have a dominant ratio going into this buys to sells. Sells took the control, and you can see they had full control of the 1% band, clear control of the 2.5% band as well. Price immediately was rejected. So it rejected to a point where buyers stepped in and refused to let the price go any lower. They capped out any further downside action. Very visible here in the 2.5% band, very visible in the 5% band, and I call this buyer bedrock. So if we have tons and tons of buyers stacked in an area, the only way to break through that is if a massive bag holder sees this as an opportunity to sell with minimal slippage. Now, in a bull market, I believe that incentive is weak. I don't believe someone with tons and tons of Bitcoin would look at this as an opportunity to sell if we're clearly in a bull market and things are they're going to have a much better opportunity to sell at a higher price. So here's Bitcoin USD on the 15-minute, and you can see every area that has been very bottomy, marked by the fact that buyers have stepped in, stacked the order book with orders, and prevented even medium, mild, moderate sellers from breaking us down. And this has been an absolutely amazing tool. This has been why I've been stacking into an existing leveraged position And I bought, I think in my past 5 public trades through TokenBot in my Telegram group, about 3 of them have been within $10 of the local bottom. So this tool is absolutely amazing. And one of the things that you would talk about, Tone, I remember from the seminar I went to you in New York City in 2018. You talked about getting your ducks in a row. And getting your ducks in a row is something like this. When you see each band clearly lit up, this looks like a great opportunity to buy. Buyers had the 1% aggregation dominance strong. They had the 2.5% band completely owned. 5% band, yeah, it might have gotten a little thin down here, but clearly buyers were not letting price go any lower.
But Joe, but also in a way, if you look at that transition, right?
Mm-hmm.
It looks like the buyers that were willing to buy 2.5% below, like moved up their bids, because the lower level band. Move your cursor to the left a little bit, right? So that dark green area, right? That dark green area happened. Nope, right there. Yeah.
Yep.
So it went dark green because probably the ones that were gonna buy, thinking that it can dip a little further, gave up, and they were willing to buy earlier.
Yeah, you can clearly see
it migrates over, showing you that the buying is strengthening.
Mm-hmm.
Like the desire to get in is like moving forward in a visual way. And that's why when Joe was showing me this the other day, I'm like, oh man, this looks like really good data.
Yeah, and your understanding of it is perfect. Yes, this is a competition to buy. People are now getting closer and closer to the book. At this point, people were saying, this is a low, I want to get in. They're pulling their orders. This is, we're factoring a very important psychological element here, and that is, FOMO. What we're getting is buyers that were saying, all right, this is it. I better get in now. And so they pulled orders. As you can see, we were moving down. Theoretically, this would strengthen, but the 2.5% band also got lit green.
Right. And you can see how those people didn't get a chance to get in because it didn't fall that low.
Yeah. So all these people become prospective market buyers, and that's going to do the most damage to the bears. Now, we did get a little area, a top area, clearly marked here by 2.5 and 1% control of the bears of the bearish side of the book. Right. And we did pull back a little bit right back into that.
But you also, guys, keep in mind, this is a 15-minute chart. These are very short, day trades.
So let me talk about that for a sec, because the reason why I believe this works for both, you can make long-term decisions, swing trades, all that. I use small timescales because it's more clear to see, because the information prints on the last tick of the candle. So sometimes it's good to even drop it down to a smaller time scale to really see how each candle in terms of the order book is printing on the final tick of the candle. So on a 5-minute, you can more clearly see how support or resistance is maturing. So yes, you can bring this up. I do think that this is better to make your long-term decisions on a smaller time scale, because like you see here, you can much more clearly see the bands maturing and developing into clear support, maturing into clear resistance, back to support, and then this created rocket fuel. This was amazing. A lot of people pull their conditional orders to market buy. We push up into resistance, so we lose the ratio. But clearly, we had buyer bedrock running this thing all the way up. So that's one of the theories about the order book is, as long as you have buyers chasing the book, you're going to have support, and that support is what I bank on to make a general long-term decision, or a general short-term, a general long-term long, or a general short-term short. But my long, this isn't just for scalping. I could scalp this, and I do sometimes, but I'm in positions where I have longs from much lower targets. So all I've been doing is adding leverage to my longs on the dips. My goal was to have a very nice leverage position that wasn't overextended by the time we hit 10K, which I'm now set up for. So now I've been, more just in analysis mode and taking these trades. For the sake of looking at larger timescales and seeing how the order book overlay pans out. Now, since this is a new product, we don't have all the historical data we would want. But yeah, you can see that on a larger time scale, you do have a broader view of price. You know, of course, you're going to get stacks. There are different ways to visualize the order book overlay, which this is. This is called the order book overlay. You would
Hey,
simply,
Joe, I'm
uh
sorry. I got a question. It's a tipped question, and it's related to this. I hate to interrupt, but if I let you go on, then we won't know exactly where on your chart the person is referring to. I just made Seth G an admin, so he doesn't have to deal with slow mode. Maybe if you have a timestamp in mind, Seth, if you can throw that out there. Again, I'm sorry for interrupting, Joe. Let me read the question, because unfortunately it'll be very hard. The question came through a few minutes ago. In the area just right of where you are now, you can the order book drops pretty much all at once down in price as actual Bitcoin price rose. Then at once the bids moved up again as real price fell. Is that because one entity is dominating the book?
Okay, yeah, I'm gonna read that too. In an area just right of where you are now, I'm assuming he's referring to this area.
Probably.
Um, let's see. Uh, you can the order book
Oh
drops
no, no, he
pretty.
said I was referring to where the yellow arrow is. So probably the prior one.
The yellow arrow.
I mean, they're kind of green,
Oh,
yellow.
so this is what he's talking about.
Let's try this again. The area right where you are, just right where you are now, order book drops. Yeah, so basically the price goes up and there's no short-term bids.
Yeah.
Right. So that, to me, that means if the price goes up and there's no short-term bids, there's no short-term interest. And that means this big run-up isn't being sustained. So, and it did pull back, indicating that, hey, the price went up, but all those people that didn't get in didn't raise their bids, and therefore this jump will not be sustained. You can see the same thing happening if you go back to the 22nd. You see the big price and a jump in price, but there's no one that wants to keep buying it right next to the price, and it's no surprise that the price then fell.
Mm-hmm. That's
But
exactly it.
right, but if you see the price rising and and you don't see this black gap immediately below the price, that is a great indication to me that this price is more likely to be sustained. You can kind of see that after that, right as the 25th began, as the price is rising, you have very little selling pressure from the order book, and the price keeps rising and rising and rising. Even with those blank gaps on short-term bids, there's really not that much selling asks, and
This is
therefore the price just goes up and up and up.
this is why I think it's important to maintain a bias in a trend, especially if we're in a bull trend and we do see stuff like this. Then we might not have the order book support, but we clearly have the market buyers, and these could very well be impatient buyers, and that's what I bank on. I bank on people to fall back into a price discovery mode, and when that price discovery is completed and we agree in the market, collectively agrees that this is a valuable price for Bitcoin, 8,265, then we're going to continue a bull trend, and it's going to be market buyers that push us up. So these are all people like you were talking about, potentially people that missed the boat, and now they become prospective market buyers as opposed to limit buyers. Because if you were a limit buyer this whole time, you wouldn't have been filled. We haven't gone back to 82.95, and now we have a competition to buy, because now people are going to have to be stepping on each other's toes to get whatever order they can get filled if they're bullish. So that's when you get a little bit of these pockets, but clearly it wasn't a sell dominant pocket. Yeah, we might have had some 0 to 1% control, but that isn't really enough control. That's more of a scalp area. The general trend was we did have buyer bedrock in the 5% range, running the price up and protecting any further intense downside action. to a point up here where we went vertical, sellers gained control, and we did go and make a higher high. We did give this area time to mature. This price discovery area took a little bit of time. It was very flimsy. And you can see we lost 5% support a number of times. We lost 2.5% support, had some chop. I mean, we can even see the liquidations in that area. So in this bottom indicator, you have liquidations, which is a fantastic way to view who's the psychology of the market participants. I'm assuming to the short side, if we're getting liquidated, these include both both highly leveraged and conservatively leveraged positions. So that's something that I factor in too. Is how what kind of market participants do we have? Degenerate gamblers that are going 50, 100x and getting liquidated in the millions, and we can pull up examples like this. I'm sure this wick probably took out quite a few people. 10.4, if you look at the very bottom of my screen down here, if you look at these two values, and I'm hoping that you can see on YouTube, but I'll read them out.
You can probably double click on that indicator real quick in the middle of it, and it'll just make it big screen, and then you can double click and get out of it.
Yeah, so this is pretty much one way that you can view what kind of participants we're dealing with. Degenerate FOMO moon boys. Are we dealing with conservative positions getting liquidated? If we're getting conservative positions getting liquidated on the short side, then we're really grinding our way into these beautiful ranges. Sellers are going to be pushed on their heels if the conservative sellers are getting liquidated. As long as that's happening, then I remain bullish. So people that got in even at conservative levels down in the lower 8Ks, 7Ks, whatever, 5x, 10x, and they're getting liquidated, then that's a bad sign for them. That means that buyers are pushing sellers onto their heels, and if we're convincing sellers that it's a bad time to sell, then that's when we're going to be getting our breakouts. And we haven't even had, in my opinion, a real breakout. We've had grinds. These have been grinds over the course of hours. Even our most recent one that was near vertical right here, if we drop this to a 5-minute, or let's leave it at 15-minute, you can see this still was not one 15-minute candle that consumed approximately from bottom to body close a high. We're talking about a 4.8% move. Now, in Bitcoin, I'm used to seeing this in one candle in 5 minutes. This is still a grind to me. In my eyes, we haven't even hit real FOMO yet. All we've hit is what I believe to be mostly money coming from the inside, injecting money into the halvening hype. You can see,
and this is a big difference. As that 4% move over a 1-hour time span took place, you can see how the very short term, within 1% of the price, how there's still lots of buying interest in the order book, and there's no short term, like immediate selling interest. So this is the kind of up move that is more likely to be sustained, to go up a little bit further, and you don't have to immediately take profit on that position.
Exactly. Yeah, this was actually very comforting to me. It was unfortunate we were losing that bedrock, but this is FOMO. This is people stacking the top of the book. This is people competing, stepping on each other's toes to buy. And
and the same thing is happening right there at 3 p.m. where the price starts to go down. No, 3. If you go to the right, go to 3.00.
0300, 3 a.m.
Right, the price starts to go down, but look, there's really not much selling pressure going on from the order book, and the buying is stepping up.
Yep.
And this is why I really like this. It's an awesome visual indicator.
Yeah, this clearly shows you when buyers are like, nope, we're not letting this go down. I have strong interest in this price. I'm going to take it.
And this leads us to a very good question that Just Me asked, and I'll read it verbatim. Spoofing is so prevalent in crypto. How does Joe's indicator? It's not Joe's indicator, right? This is the platform trader is providing you this data, right? You can build an indicator off of this data. Joe doesn't even have an indicator off of this data. He just uses the data directly. And because it's so new, this whole platform is new. It's still in beta. And I'm sure probably by end of year, Joe will probably develop an indicator once he has some more rules in place as to what this data means, right? We're still trying to visualizing and interpret this data. If you and I, like I said, I just created an affiliate link with this data provider for this visual data. So the question on spoofing, let me, Joe, you're the order book expert. Let me try to give my unprofessional opinion on this and then see, and you can tell me that I'm crazy. I have always said for years that spoofing is generally irrelevant. The only people that would get spoofed by spoofing data are bots. We are not bots, we are humans. So this data is a snapshot at the end of the candle. So if there was a bunch of spoofing going down in the middle of this 15-minute candle, and most spoofing is done on microsecond basis, it is actually generally irrelevant. Okay. At the end of the candle, you see how much buying and how much selling there really is. So to me, spoofing is there to spoof bots. It's if you're a human, if you get fooled by spoofing, I don't see how that's possible. So spoofing is an illegal practice, but spoofing is not. It doesn't change. Spoofing is not price discovery. Spoofing is getting fools to buy into a trade that create price discovery. So spoofing should, if you are scared about spoofing, like you shouldn't be trading. Spoofing will affect maybe like of all the things that can fuck up your trade, the probability of spoofing doing it is like 0.01%.
Yeah. You just don't act on it. This is one of the advantages, like you said, of using something other than a 1 minute time scale. A 1 minute time scale might catch the 10 seconds that a spoofer has his order in the book.
Yes.
And the one thing that is, so what's the goal of a spoofer? The goal of a spoofer is to trigger market buys, whether that's bots or that's instigating FOMO of some kind. Now, they usually don't last long. I have seen probably the longest example of a spoof lasting a minute. I've seen what I believe to be a whale trying to stagger in their buys, and I wish I had screenshots because it's actually pretty funny. I saw a noob whale trying to stack in a $50 million buy. So this is one of the beautiful things about this order book. Everyone's so used to seeing order books stacked like this. This is a cumulative order book data, almost very similar to a depth chart. So what the programmer, and I want to call him out because he's the two guys behind this, David and Alex, who created this, are the programmer is brilliant. David was amazing with his understanding of that this data is important. Now, one of the things they changed was making it so that you can see the order book in a non-cumulative sense. You can see each aggregation with only the Bitcoin in it, and you can much more clearly see the resistance areas. 11, 12 million stacked here. You know, it's clearly a sell wall in this region. So this is very helpful. Now, when a spoofer does pop up, you can see them, and we might even catch one. But there's been about a $50 million spoofer that's been coming up a few times a day, and I'm hoping that maybe we'll catch him and see the impact he has on the market, or he or she, whatever. But spoofers are basically there to trigger market buyers. If you're not someone that falls into that trap, then you're going to be okay.
Hey, Joe, what's the smallest time frame you can run this on? Can you do this on 30 seconds?
So far, it's 1 minute.
1 minute. Okay. So if you change this to a 1 minute chart, this will probably be affected by spoofing. And that doesn't mean you can't be profitable, right? Mm-hmm. So you, if you have access to this data, you could look at it on a 1 minute chart, and maybe it will give you better trading signals, or maybe you'll realize this data is actually useless on a 1 minute chart due to spoofing. But that doesn't mean that the data is useless on higher level time frames. Spoofing becomes generally irrelevant.
Yeah, I mean, if you look at this even on a 1 minute, look how stacked we got in the 1% aggregation here. We had some support in the 2. We had a lack of support in the 5, but that was because it was a 1-to-1 ratio. If it's black down here and it's black up here, then that means that it was a fair fight in that region. In other words, it was about equal sellers to buyers in that non-cumulative region. So you can see just drawing out this ray, or even this one, price is clearly above that. So that's still, even if you're looking for a scalp, that would have been an entry. And at any point in time, particularly when the book started getting stacked in favor of the bears, you could have exited in profit. So if scalping is your goal, absolutely this is a tool. But I'm using this to dollar cost average into an existing long that I have that I believe is going to continue to remain profitable. I do believe that we're going to continue up. I just think that the market is in a very a delicate state right now. As far as what I'm looking at, this isn't quite the support that I want to see. I want to see bright, beautiful bands. And let's get this to a 5 minutes so we can have that broad view. You can see that we're kind of walking on eggshells here. This isn't the support that we had down here. So, it's okay to be a little bit dark. It's, obviously it's not ideal. We want to find these very powerful support regions. And when we get one, those are the areas that are clearly likely to return you some money on a long trade. I'm not playing the short-term trade. I'm not playing shorts and in a bull market. I think that there's way too much risk in a bull market to go short. I would much rather exit a long, take the profit, and then wait for another re-entry signal. So that's how I'm using this as my tool. I'm not playing both sides of the coin. Um, I'm not flipping from long to short. I'm maintaining a trend bias when the book gets stacked in favor of my in favor of my move, which is generally bullish right now. We are walking on eggshells. The sellers do own 1% pretty consistently. We do have a very weak buyer bedrock, and this is what leads me to believe that a little bit more consolidation here is going to be very powerful for the market. If we can consolidate here and build these bands into much brighter green bands, in other words, to gain much more of a ratio in the book against sellers, we're going to create this type of buyer bedrock, and we're going to create this type of move out of it. We can grind. It doesn't matter. We can grind. We can pump. I don't care. But either way, as long as we're consolidating and we're finding support, clear, visible support in the book, then the question is a big bag holder going to sell that to minimize their slippage? And I believe in a bull market, the answer is going to be no, the majority of the time.
Hey Joe, we got other good questions. We got a couple relating to Coinbase. Now I see that you are using this on BitMax. Are you you're using the perpetual on BitMax?
Yeah, BitMax perpetual. Here's Coinbase, for example. Very different data set.
Yeah, can we talk about the Coinbase data set? And also there was a tipped question earlier that says Coinbase did not get a higher high from 10/26/19, but other unregulated exchanges did. Which would you put more weight on? Do you take body or wicks? I mean, this has nothing to do with the current data. I mean, we can answer it later, but I'll answer this real quick. I don't try to go with one particular exchange. I try to go with consensus. And in this case, I don't even really care about the wicks. Candle closes mean more to me personally. And if, 3 exchanges got a higher high and 3 exchanges did not get a higher high, it's a double top. Like, it's really irrelevant. Like, I don't split pennies. Like, if we made a new higher high by like less than 1%, or we didn't make a new higher high by less than 1%, to me, it's all the same shit. Like, I don't split pennies. This is one of my problems with bot trading, is that to a bot, a 1 penny difference in price is the same as a 3% difference in price. A bot doesn't care, but I care. So to me, it's almost like an irrelevant question. It doesn't matter if one exchange got a new all-time high and another one didn't.
Yeah, I'm going to agree. I think it's just different liquidity pools, different market participants on different exchanges. But I would say about Wick data, I do like Wicks. I do believe that they are rejection data. So this obviously we have some rejection data here, and it didn't really pan out. But we also aren't suffering. We're still consolidating above 10K. So even though we had a rejection in the range of 10,370, that's still okay. And one tool that we can use to really analyze this candle in particular is down here. You can see these values in Bitcoin. It's all relative to in Coinbase they use Bitcoin, so as opposed to BitMEX where they use contracts. So right now in this candle we had 80 Bitcoin in buys, 12 Bitcoin in sells, 68 Bitcoin buy delta. which means we had much more buyers than sellers. Now, let me make sure. I wanted to zoom in. Okay, so we had in this candle, I was actually probably looking at the one right before it. I had to
Wait,
zoom in a little bit.
can you throw the data on there? You turned off the order book.
Oh, yeah, let's get that overlay back up.
Also, you're on a 5-minute chart instead of 15. Do you want to be more consistent with 15 or?
Sure. It's all, yeah, like I said, the only reason why I switch is just to see the last print of each candle. I think that sometimes it's good to look down a bit further. But let's get that.
Oh, and also, I'm sorry, on a side note, unfortunately, I have a hard stop on this video in 15 minutes. And the reason for why is gonna about to make everyone laugh. I actually have to go get a haircut. Like
your head's looking shiny.
I know. I got one of these days because anyway, the conference is coming up. No, I want to get my beard trimmed. I want to I'm new to the whole shave head and beard thing, so I don't actually do it myself. I pay the money. I support the economy.
Yeah. And I hope he takes Bitcoin.
No comment.
So one of the tools here is you can see in these values, you can see exactly how much was bought, how much was sold, and the delta. So we can know. I like this on reversal candles. So let's look at this. This is a pretty weak reversal with the wick, right? Now we have in this candle 188.
Oh wait,
Bitcoin.
what was that message? Where's that message on the bottom?
I'm working. These are the alerts. The alert system here is fantastic. You can have it sent to your Telegram. You get pop-ups. The alerts that you can set up with this tool, you can have it to let's just show the general concept here. You pick your indicator, whatever. You pick the particular area that you want to be visualizing. If it's non-cumulative, it'll separate 0 to 1 from 1 to 2 to 2.5 and so on. If it's cumulative, it will include the entire area. This might be something that we need to look at. But if it's cumulative, it should include 0 to whatever percent that you're looking at. Now, order book depth non-cumulative is what I'm paying attention to. And then you just do your normal thing. You can pay attention to what you're looking for. Me, I prefer the ratio. I want to know how many more buyers there are relative to sellers. I don't really pay attention to the exact bids and asks. And, you look at your value and then you type in a threshold. In this case, the one that you saw flash was a value. Let's take a quick look right here, and this was on BitMEX. So let's get back to BitMEX real quick and see how the book was stacked right then and there. Oh wow! So we took a spill. So right now we had that this bar right here is increasing, showing that the buy dominant ratio is increasing pretty quick. Buyers are very interested in catching this falling knife.
You may want to switch to a 5-minute chart here since we're flowing so fast.
So yeah, this is exactly why I'm flipping between all these different. Let's go to 1 minute so we can really see how this matured. Look at this.
Look, the buying is getting strong, and there's not that much selling interest.
Yeah, so we could look at this first candle and say 835,000 was bought, 17 million was sold, a sell delta of 16 million. So this was clearly a sell dominant candle. And so on. 6.4 million bought, 18 million sold. This looks like it. This looks
Look at that. It's starting to bounce. Yeah. This bounce was not. This drop was not particularly strong as it was happening. As you can see, the buying interest stepping up right at the price without that much continued selling interest.
Yeah, exactly. And you can see exactly how much was sold. We're now getting to a point where we're at 12.6 million bought, and we're a couple minutes into this candle, 15 million bought against 4.26 million sells, and buyers are increasing, sellers aren't even moving. Now we just flipped. This is a 1 minute chart. Sorry. So yeah, we just flipped, but we had 15 million in buys against 4 million sells, 11 million buy delta. And that's visible again in this indicator. And if you're at all curious about how to set this stuff up, don't hesitate to reach out to me. There's also a Telegram community where you can ask all kinds of questions. I have mine set up in a particular way that suits my comfort, but anyone can create their indicators and create the views that they particularly want to see. But right now, this is looking like a failed breakdown. Buyers stepped up and they're capping out this downside action. We're getting now we can look over here. We're looking at hundreds of thousands being bought, tens of thousands being bought. And one of the things you can notice, for example, 600,000 market bought, and there's a subtick right there, 26. That means 26 sell orders were knocked out from that 600,000 market buy. Again, 12 orders filled in a 50,000 market buy. 100,000 market buy filled, didn't even fill a full order. So we definitely have a bear in there right here in this aggregation, 10,190. 550K taking out 8 sells. So, you can see exactly how many participants are being knocked out of the market with the actual buys and sells going on. So this is also good data. If we get a 1.5 million market buy, 280 to 2.8 million. All right, so this is one thing we're going to have to look at. We can change the trades from trades of any size to zoom in on just above 100,000. We can look at a 2.8 million market buy took out 292 sellers. We don't know if that's 100 of those could be one contract, but we know that 292 prospective sellers or sellers with the orders in the book got taken out here. Another 74 sellers got taken out with this $1 million market buy. So we can kind of see that the strength in the buy relative to what kind of order book stack we have from the sellers. Now we just had a spoof for flash up to 10 mil, 13 mil. Let's see, 17 mil back down to 8. So let's see if he triggers any market sellers. Tens of thousands being market sold. Spoofer from 18 mil down to 5, down to 4, down to 3. Didn't do too much damage to the market. 25K, 20K. Really, it seems to be more right now like sellers are not interested in trying to dump into this, even with that spoof.
Right, but right now there's no green or red band. So right now there's really, to me, that last green candle was not that strong because there wasn't much buying in the order book. So I'm not surprised it's starting to come down a little bit. But hey, the buyers are starting to step up.
Yeah, this is what we want to see.
But so are the sellers. So you can see right now that dynamic.
Yeah. So let's look again at the sells. Let's see if they had any above 100K. A 5 million market sell, a 5 million market sell, taking out 582 buyers, 199 buyers. So we can clearly see, yeah, sellers when they come in strong, they can hit hard. But buyers are stepping up with tons and tons of orders to cap out this further downside action.
Yeah, to me, this looks like someone really wants to drive down this market, but they're having difficulty because there's a lot of buyers waiting.
Yeah, you can see that these 3 aggregations are insulated. I tend to
though we still did drop a few $100 and still dropping, but
193. Yep.
Yeah, there we go.
Let's see. This is going to be probably an instance where.
Flip this over to the 5-minute chart.
Yep. Let's look at the liquidations. 12 million in liquidations right now in 5 minutes. These are probably degenerate gamblers.
And they're just slowly being wiped out, even though there is buying interest.
Yeah, this is what I would consider a liquidation hunt.
Once all of these guys get knocked out for being too leveraged, the price has a high probability of rebounding back to that area.
Now we broke 10K, and this is not what I want to be dealing with over and over again. Here's someone spamming. All right, so now I need to change this precision a little bit.
It sucks. I gotta go in 7 minutes.
Oh shoot. Yeah. So we're seeing buyers step up. Buyers are stepping up right now. I do believe this is probably going to be a shakeout. We're at a 2.4% move to the downside in 5 minutes. This is definitely a strong move, but buyers are clearly not moving out of the way. They want their orders to get filled. A 2.3 mil, 2 point something. This guy's moving around a little bit. Let's get this thing back to trades of any size. And I need to change this precision back to 3. So we have $10 aggregations back up to 10K. So this I would expect to reverse. This to me is just a liquidation hunt. $69 million liquidated here, Toad. And we're talking degenerates. Pretty much anyone that went long from above here, from this wick, 50, 100x is probably knocked out. Anyone that went long here, 100x is knocked out. A ton of longs are getting completely wrecked right now. 9,700. Wow, this thing's getting wild. Tons of volume. Then let's look at it. 250 million in sells against 90 million buys and growing. a sell delta right now of 150 mil. Um, I believe this is going to have a big wick and a big reversal pretty quick. Um,
Yeah, but at the same time, it's we started this video by being kind of bullish. I know I've gotten a lot of conspiracy theories that, hey, anytime Tone says something, it immediately happens the other ways, as if someone is watching
yeah,
my podcast and they're like, hey, I'm gonna have fun with this. And that goes to the fact that Bitcoin is a very illiquid market.
hmm
Now I'm looking at my daily chart, and my daily chart still has the same thing. We did break that stop and reverse point to the downside. I thought it would be tomorrow, but it already happened today because we just moved about $300 to the downside. But yeah, looking at that order book data, uh, this crash did not scare me, even though it was really really bad at $300. But just visualizing it the way Joe has it on that 5 and 15-minute chart, it doesn't look as scary as the price crash indicated, which is interesting
yeah,
to say the least. Again, this is new data. I've never seen. I'm not an order book guy. Like I've never, even when I was trading, I never looked at level 2 quotes. I couldn't care less about the order book. Like order book is like, of all the things that I use in my trading, order book is like up there with Elliott waves. But I'm finding this visual very interesting.
yeah. Uh, I agree. I know you got to leave here. We're on the countdown, but it looks like we're starting the reversal here. Let's see if we. I haven't been noticing that many degenerate shorts. So if anyone shorted the bottom, they probably would have been liquidated by now with 100x or so.
Well, but hey, Joe, if you want to keep talking on my YouTube channel, I can let it go. Like I can probably like drop out and I can keep you going on my cell phone. And I just want to answer a couple of questions about traditional markets, and then we can. And if you have time and you want to stay on around another 30 minutes, I'll leave you with the channel, and then I'll just come on and close it.
Yeah, happily. Yeah, go do that.
Okay, so
Start your thing.
let me we're going to get back to this in 1 second. I'm going to jump the screen share for literally 5 minutes just to finish up. And hey guys, if this data interests you, there is a link in the video description. In this video description, there is a link for TRDR, stands for trader, and this is the visualization of this data set. Joe will be joining me at Unconfiscatable. Joe will also be joining us in the Financial Summit DR, where he's going to actually do a real presentation on this and some back testing and some history of his trades using that data. Also, if you want to support in other ways, here is the affiliate page on my side. Okay, so I do want to get to some of those tipped questions as I promised, because they were kind of interesting. We answered the Coinbase question. Oh, we got a couple of funny comments. Actually, one funny comment. One is from Joe. Joe, two of the best in the business, Tone and Joe. This is from Joe Carloser. Thank you so much, Joe Carloser. Here's the funny one. We were both tagged in this one, Joe. Oh no, wait. Which one's? Oh, here it is. From Red Cano. My fear of trading is I would lose all my hair. I thought it was great. Okay, so here are the two traditional assets. So look at S&P real quick. We're on a 9 daily on a Friday, which means I would be out of the stock market if I am a swing trader. If I am a position trader on a long-term scale, I'm still long in the market. The dailies are on a 9 as a swing trader. As a position trader on a weekly scale, it looks great. It's on a green 2 above a green 1 and an all-time high. It's like you almost want to add to this position. But as a swing trader on a daily 9 on a Friday, I would be out of that market. Okay. Now, here are a couple of stocks that people asked for. So this is the person that said they took a short with put options on this asset. And I said, oh, I would be very careful with this trade. I would not have shorted. Look, the sequential is just one tool in a dozen tools of your trading toolbox. Now, there are probably a million different tools in the TA tool set. You cannot use them all. You got to pick the dozen or so that you like the most, and then you want to combine those based on what you're doing. To me, the sequential is just one thing. I, like Joe said earlier, as I teach, you got to line up some ducks. And I need more than just a 9. The 9 is just one tool. This is not a reversal candle. A reversal candle is key. This 9 reminds me so much of this 9. And while the asset eventually went lower and gave you a buying opportunity, that took God knows how many months, from March all the way to July. And if you took this with an option trade, you probably did not buy options that will give you 2 years of time. Okay, so you'll bleed away time. So this to me is not, and this was even a better candle to short on than this candle, because this candle is in the vicinity of a double top. So the probability of a breakout above the setup trend line off of this 9 is a lot higher. I don't like these bullish candles that close at the top. Something like this is more interesting, because you see right here, you have a reversal candle on 6, and you still made it to a 9, and the 9 itself showed you a bunch of weakness. This is a much better 9 to short on than the current 9, and you can see how the price went down. And this is not a good 9 to buy on. It's better off waiting a couple of days till you get that reversal candle. In this case, this 9 is a little bit better, a little bit, but not much. You can see how the lows are higher. The setup trend is holding, but it's consolidation at the bottom with a bear flag. I wouldn't even be comfortable buying on this 9, but this strength on the 1 candle makes me a buyer. So I would wait not only for a reversal candle view, I would also don't forget, it's a nice bullish trend. It's very dangerous to short off the bullish trend, and it's kind of overextended, but not too much. This is where it's really overextended. The height of this price compared to these moving averages is way higher by percentage than the price of this compared to these moving averages. Okay, so this is not a trade I would have necessarily jumped on. I think there are better trades, but you know, anything can happen. You never know. On a daily scale, again, same issue. It looks pretty bullish, and on a daily scale, you're on a 5 of 9, closing at the top, breaking setup trend. And yes, you got a sequential 13, but you already went past that. So, and look how this setup trend line finally broke right here. This is more interesting to me. You got rejected on an 8 candle at setup trend. You never made it to that 9, but that's close enough. But this time around, you broke this critical resistance. So this is not the short I would have taken. I think it's a little bit too dangerous for my blood. And the other stock I was going to look at is Space. And then I'll let it go, and then I'll give it back to Joe. Space is very interesting. I had no idea this happened. So here's the daily chart. The day just flew off of this. So to me, this 9 is concerning. It is a big run up on a 9. I would have, if I was in this long and I've made a bunch of money on this, considering how much it went up, this 9 is where I'm exiting. Am I exiting with my entire position, or am I exiting with half of my position? The answer is I don't know. I wasn't in the trade. If I was in the trade, am I taking profit on Thursday on this 9? The answer is absolutely. How much profit? At least half my profit. I mean, there's no reason to really panic. There's no weakness. Earnings is coming, so I got a few more days. These shadows are concerning, but not overly concerning. It's not a true reversal candle. The combo 13, I wouldn't have known is coming unless I looked at it from the lens. Oh wait, wrong one. Unless I looked at it from the lens, it's not coming up. But you can set these numbers to be the combo numbers. But the combo 13 is also concerning. I probably would have been out of most of my position and did not profit on this ridiculous run up. I do not chase stocks. I would not have been entering this trade on Friday. I would have said, hey, I made my money here. I'm going to let it go. This is not the time to FOMO into any stock. Now, that is a daily 9 that just passed. On a weekly scale, this is a weekly 9, which has a potential of a huge reversal. But once again, like the prior stock I talked about, this is a bullish candle that goes all the way up. And It closed at the very top on Friday. I have absolutely no indication that this is ready to crash down. I do not have the stones to short this thing, even with options. I want to wait for weakness. And if this thing opens at $15 tomorrow and I didn't short it, so be it. Okay. I am not FOMOing. This is a 9 on a weekly. I definitely watch this thing. And if it starts to show you weakness on Monday, then it's a potential short. But I would not rush into a short off of this 9 just because it's a 9. Okay. I hope I cleared that up. I'm 5 minutes over. I'm going to give the screen share back to Joe and let him talk more on what's the Bitcoin price doing. Hold on. We are rebounding quite nicely. We're back above $10,000. I'm going to cut my camera feed. I'm going to leave this running. I'm going to stop the screen share. I'm going to say goodbye to you guys. I got to go, get my beard fixed up. Maybe I'll jump in or something, but camera's being cut. Joe, floor is yours.
All right. Yeah, I'll just keep this riding for a little bit here. And thank you, Tone. Let's look at what happened. And this is something that's very common, a shakeout, right? This just liquidated, this 1 5-minute candle liquidated $92 million in longs. This is utterly insane. So pretty much anyone above the lowest point in that candle got super wrecked. People probably were putting in very highly leveraged longs and they got liquidated in the 100 near, what was it exactly? It was exactly 92 mil. So the market is going to have a tendency to shake out whoever is over leveraged. Me and Rolf were discussing the other day about how not everyone can make money in a market, right? So this is clearly a move that just shook people out, created some instability, but clearly the bulls are immediately responding to this in bullish fashion. We have a ton of support in the book. We've hit some bedrock. This is the 2.5% band. This is the 1% band, a little bit thin, but immediately we started reversing and we're already back above 10K, liquidated what we needed to do. We have spoofers on both sides of the book, causing all kinds of damage right now, triggering this is already an emotional experience right now. We just jumped down $300. So of course, spoofers, this is their magical moment to be causing as much damage as they possibly can. So for now, I would be observing the fact that we just liquidated a ton of shorts. We had what's likely a pretty low liquidity sweep back up, 69 million in buys, 53 million in sells, 16 million buy delta, followed by 60 million buys, 38 million sells, 21 million sell delta, and up over here, 14. This is still a relatively young candle, but 14 million buys, 22 million sells, 7 million sell delta. This isn't too strong. Now we are losing that 1% band. We still have a strong 2.5. So we do have people chasing the book. We do have buyers who caught this falling knife. And I think that this is going to turn out to be a full reversal situation. And we're already, 2/3 of the way there. I'm going to pay attention to some questions too, if you guys have them. I know questions move pretty quickly. So I'll be trying to pay attention to this. But yeah, this is a great way to catch the moves. We're already near a full retrace. I hope we catch this right before your eyes. So right now here we have a $765 million order pushing the aggregation back into 10,060 with an 11 million spoof down to 6 back up. So I mean, this is clearly a time to play the sentiment. The emotional sentiment right now is extreme fear, and it was immediately rejected. So this is very strong to me in a bullish sense. Now, could you have front run this and caught that move? I think the answer would have been you probably would have sold around here when the book started getting stacked, and you would have waited for your next entry if you were playing scalps and you're playing both sides of the coin. We did have some very vague buyer support, but I wouldn't consider this bedrock. And now it's starting to clearly show that there's a ton of buying interest down here. So I guess this might have been, one of those instances where we pop our heads below, but we had such violent buying going on that it's probably going to keep the price props. Hundreds of thousands coming in. The sells that we saw taking this down were in the 5 million area. So I mean, tons and tons of fear going on in this candle. But again, I just look for shakeouts in the market. I believe them to be normal. And in a bull trend, is it worth trying to scalp a $300 move? Not quite. Yeah, Coinbase. Let's pop over to Coinbase for a sec. This is the thing. Coinbase tends to have what I believe to be a bit more sleepers, and in other words, let's break this down. In Coinbase, let's get this thing to a much lower precision, so you can see exactly how the book is stacked. We have pretty much nothing on the buy side, and we have a humongous 5,000 Bitcoin sell wall in the $10,000 to $20,000 aggregation. Maybe we can drop this a little bit more. So you can see that we have a ton of resistance here. Coinbase spot price, of course, is going to be reacting a little differently than something like BitMEX, but the book is very different. It's very different. We have a lot more sleepers in here, and I think a lot more market buyers on spot exchanges. So why does this differ than BitMEX? Well, let's look at BitMEX's order book at a precise view, right? We have the majority of the action in pretty much almost always chasing the price. So we have 207 or 200 or so million dollars in the $9,000 aggregation, and then this thing jumps from 10 to 20,000. So between a full $10,000 aggregation, we have 257 million in sells. So this is a $10,000 gap that has this many sells, and clearly we have a number of buyers chasing the book. So that's the one difference between Coinbase and spot exchanges and BitMEX. I believe BitMEX tends to be much closer to the action than other exchanges do, where they have sleepers. Sleepers I also call static buyers and static sellers, people with orders in the book that they leave there. They don't care if they get filled. We don't have nearly as many market participants day trading on an exchange like Coinbase as we do on an exchange like BitMEX. So that's why I do like to pay attention to BitMEX. It only because we have a lot more action closer to the book. Severin says, Joe, you also think this dump is a premise for a further pump to 11K plus. I do believe this is only a shakeout. We do have a recovery here, and we do have strong support building in the 2.5% band. Now, this isn't going to be a 3-star trade to me. And when I say 3-star trade, I mean, each band lining up similar to what we would have over, let's say, over here, where we had a ton of support, buyer bedrock, and we had control of the 1% aggregation. This would be much more of a solid entry. Yep, I get the Bond villain thing all the time. Bitcoin and the boys. I can't help it. I guess it's just my aura. But we are trying to make change the world. So limiting existing financial powers. Ability to control finance is pretty much I guess if that makes me a Bond villain, I'm happy to be one. So yeah, I'm happy to hang out here for a bit because I really want to see how this support matures. We are in a very volatile state right now. We did just come down 3.13% from a high of 10,194 to a low of 9,731. That's a big move. This is enough to really put people on their heels. And this reminds me a lot of what we just had over here with this violent move. I think this is what really shook the market up and created a very unstable environment. So it doesn't surprise me that we have a response like this. Am I going to be exiting a long that I have from a much better price point in order to try to catch these moves? I'm not going to, unless I'm convinced that we're setting ourselves up for a short-term bear trend. And right now, a short-term bear trend isn't clearly obvious. What's clearly obvious is buyers are at least stacked in the 2.5% range from price. And as long as we can start to mature these bands, in other words, get these to be a bit brighter, control more of the 5% aggregation, of course, and then even get this 1% aggregation to chase the book and dominate it, then we're looking at a 3-star trade, and we're looking at what to me would clearly be a long entry and a move up. So the order book is going to be, with this data, it's going to be very powerful and a tool that you can use on the side amongst your other indicators. You can overlay tons of things, other indicators. You can put your fibs in here. So any analysis that you can or choose to do, you can stack on top of this. One thing we can look at, is ETH. This thing has been on fire. Wow, ETH took a spill. Look at that rejection, though. What a rejection. $264 low all the way back to a full retrace. We did a full retrace with the wick, unfortunately, but back to $297. So this is, let's see how many people got liquidated. 2.1 million longs got liquidated in this. 800 shorts got liquidated. So that means we did have some shorts that were degen, 100xing, 50xing the bottom of this. So ETH does still look pretty hot. We do have some like very strong overhead resistance in ETH. This would make me think that ETH, if we do recover a bit further and hold these bands, I would say that that would be a good exit. And yeah, of course, I'm happy to help here, Ott.
Hey, Joe, can you hear me?
Yep, I can hear you.
All right, cool. Back in business. Keep going. Got a question for you, right?
Yep.
So are you in any trades at the moment? What's the time frame on those trades? I mean, I kind of know the answer, but I'd like to have you answer it.
Yeah, so I'm in a number of trades. I say I'm all cannons long, which is to say I use multiple different accounts and I assign different leverage and different capital to each account. So at a certain point, I was all cannons long. My most recent high, let's call it my high risk position, is entered in at an average price of 8,700, and I can give you the exact number right now: 8,754 average entry. Liquidation 8,187. So I have a lot of breathing room right now to consider if this is just a pullback or if this is a change in at least a short-term change in the
so
trend.
on that note, based on us looking at this chart in real time, this move isn't really scaring you that this is going to be something very significant.
Correct. This move doesn't shake me out. I'm used to seeing this. We've had this happen a handful of times where bulls got completely annihilated, and I think this is just a normal market cycle. We can blame whoever we want, but this is a pattern that we regularly see in Bitcoin. So it's something that I'm not scared of. I don't get shaken out by these. If I went long here, I might be a little worried, but I'm in positions that have me very comfortable. So looking at a shakeout, knocking out 90 on a 15-minute time scale, we knocked out 96 million in longs. Tons of volume here. 212 million bought, 369 million sold. Sell delta 156 mil. So this is clearly a shakeout to me. This is not something that I get shaken out of. Being in crypto for so long, you kind of get let's just call it immune to some of these types of actions. Are bears still overreacting? Not quite. On the following candle, we did have 113 million buys, 102 million sells. So this is a pretty close fight here. Bulls really need to step in and prove that this is going to be the end of this downside move. And right now, they're not doing too much to convince me. This strong band down here is positive to see, but I don't want to keep coming back to test it and see this bright green band. What I want to see is this thing start to mature. I want to see bulls now exactly what just happened right now. We're now starting to build support in the 2.5% band, and we're starting to build support in the 5% band. If we can keep this and claim it, then we're probably going to keep moving up. You just saw the 5% band disappear. It was very, very dark green right here, and now it's pretty much invisible on both sides, which means it's about a 1-to-1 ratio. We can see different visual representations of that if I was to add the order book depth sorry, what was that?
No, go ahead. I was also going to point out, like, guys, all of you on this channel are seeing this for the first time in 20 minutes. Now, my 15-year experience in all kinds of trading, pretty much everything, allows me to have a really good understanding of this. And I've been a successful trader in the past. I haven't traded much lately. This is not, Joe has spent, what, on average,
2 years.
8 hours a day for a year and a half doing this, right? So this is not going to be easy for anyone. Like, this is an expertise. If Joe is making this sound easy, it's not. Trust me.
Yeah, I would actually go a bit further there, Tone, and say this is more than 8 hours a day dedicated to this. It's probably, if it was an average, it would probably be closer to 12 hours a day. I mean, there were days, 3 days in a row where I would go without sleep, just nonstop observing this, taking notes. And this is before I had access to visual cues like this. I used to have to do all this by hand, be paying attention to the trade history, be closely monitoring the order book to see was an order pulled and immediately market bought. How can I tell the difference between a serious buyer and someone that's just trying to put orders in the book to get filled, maybe to create an artificial support? A little bit of a middle ground between a spoofer and a buyer. So there's tons and tons and tons of stuff that I've done in terms of breaking this down. And what I'm looking to do with this trader data is create information and cues that traders can use to make their buying and selling decisions, because we now have values assigned to the ratios, in terms of distance from price and where the book is stacked, how it's stacked, and who it's stacked in favor for. Right now, it's stacked in favor of the bulls. The bears really don't own much right now. What I see here is bears are definitely a little bit worried and concerned. This did reverse quite a bit within the candle itself. We did start an immediate move up. So I'm inclined to think that this is going to have a full retrace. This shakeout cleared out a ton of, let's say some degens, mostly degens, cleared out a ton of this didn't clear out 10x's. This definitely cleared out a ton of people who were long and probably with way too much leverage. And if that's a very normal thing that happens in Bitcoin, so I can't say that this really shakes me out too much. It's what will shake me out is if we get moves like this and this consolidates and then the band gets thin again. If we lose support, then this is probably going to be a short-term trend that takes us down maybe to the low 9,000s. And if that's the case, I'm getting out of my long and I'm waiting for another re-entry. But yeah, if we can, Rolf just mentioned, if we can see 10.2 now, I'm sure 11K is coming. I think we're going to see 10K2 here pretty soon. 10K 35 right now. Bears are still a little bit on edge. Obviously, this big move triggered emotion, and that emotion right now is probably a panic. So as long as bulls can hold this ground and really show that this is a good buy, then we're going to pop up to 10.2, and I believe 10.6 and 11K. Above 11K, we really don't have much, and we can look at that here. If we increase or decrease the precision, we could see that really 11,000 is stacked, but there isn't much between 10 and 11,000. Once we get past 11,000, we only have 44 million in cells at 12,000 range, and it's pretty much open air above that. So basically what we'd be betting on are dynamic sellers, people that are jumping into the mix. So, and jumping into the price action actively as opposed to leaving orders in the book static, aka sleepers, and walking away until their order gets filled and then reassessing the market until their next position. So right now I expect this thing to have a full retrace. Unfortunately, it's not happened right away. But based on what I see, considering a massive wick space, considering an immediate green response, so far a second green response, which is kind of fighting, I'm inclined to think that this is going to continue moving up. Let's get this thing back down.
Look at the order book, giant red at.
So yeah, let me drop the precision so you can see more clearly. So we do have giant red at 10,100. The full $100 aggregation has $28 million in cells. If I drop this one more, increase this precision to 4, it now drops to $10 aggregations above $10,000. And that's just the way that BitMEX provides their data. So unfortunately, you can see that it drops to $1 aggregations below 10,000, but at least we can see the $10 aggregations above 10K. We're stacked with 4,555 mil between 10,030 and 10,060. So bulls have a little bit of work to do to clean this up. But it's, again, it's not too worrisome to me to see a strong buy belt band here and to see that we had tons of liquidations. When I see tons of liquidations like that, it doesn't necessarily mean that we're going to go down much further. It just, right now in a bull market, it's going to be washing out over leveraged long positions. And I saw the same thing happening on the in the descending triangle, where we were back in June, July, August, when we were really defining that $14,000 high, $9,400 bottom descending triangle. that in that instance, the market was clearly bearish, or at least to me. What we had was numerous, repetitive, massive candles to the upside, and we were just liquidating shorts, and then it would be immediate full retrace. Maybe not immediate. When I say immediate, I mean hours from the move, we would get a full retrace, and sometimes much quicker. We have had back-to-back candle moves where we have a full move down and a full move up. Now, this is a very dynamic book right now. Tons and tons of orders shifting around. Now, we did have a pull from here, a 12 million spoof up against the book. We're back down into the 9,000 range. Let's get this precision back to 3 so we can see $10 aggregations in the $9,000 range. And yeah, we're really fighting $1 million market buy. Yep, this is and now we're stacked with a 2.5 and a 1% band, very strong. This is really looking like a strong bottom for me right now. So again, I wait for a 3-star trade. I want us to control the 5 band. I love the visibility of this 2% band, and I think it's very strong. But for this to be a 3-star entry, what I want is the 5% band control to be pretty close to this brightness, and I want to see the 1% band flash into pretty bright. So this isn't necessarily a trade, even though this looks like you could have caught a falling knife and gone long. It's still a risk. I really want to see the indicators line up for me to make the trade. And right now we got 2 out of 3 stars. The Bears own 5% right now. And you can also see this. We've marked in the order book itself the 1% area, the 2.5% area, and the 5% area. Here's 10, and it goes up to 25%, I believe, but that's too far away. So we can visibly see where the order book is stacked and how, and you have the totals between those aggregations. So yeah, right now this is just a waiting game to see if this was a good trade. You know, I'm not playing this. I'm long, and I'm just not getting shaken out. That's the only thing that I'm seeing right now. Playing around this low 10,000 area, as long as we can hold it, I'm good. I'm going to be very, very confident that we're going to continue moving up. But we've been talking about the past couple days being, at least on my stream, I've been talking about how we haven't really had solid support, and this has been making me feel like bulls are walking on eggshells. And clearly, after a good bit of time, this would have been a great time to short. If you're scalping, this would have been your short. Not only would have been an exit, this could have been a great time to short, because on the sell side, when you have a couple controls of bands, as opposed to where I was talking about a 3-star trade on the buy side, a 2-star trade on the sell side is sufficient.
Yeah, but only on a short time frame, right? Because we were, I mean, looking at this data prior to the crash, and obviously we did not warn you guys that it was coming, so it wasn't noticeable enough. Like, it wasn't enough on that. I mean, I'm looking at this right now, even though I'm on a cell phone. That's not enough to be to enter. I think that's not enough to enter that short. I think that crash came a little bit unpredictable.
Yeah, this crash was definitely a bit of an overreaction, but it also clearly wiped out so many longs. You know, the fact that it did that makes me feel like this isn't really much to worry about. Yeah, you know, could you predict a 2.37% single candle move? Not usually, and yeah, this wasn't a clear indication to go short, but this definitely would be a clear indication to cut your long. If you're scalping, I'm not scalping right now. But yeah, right now we're building this strong 2.5% band. We do have a red candle consuming a bit of this green space that we just pushed away from. The candle body close. We're now retracing full. This green candle, not bearish engulfing yet, and bulls are stacking again. This clearly is representing to me that buyers have strong interest in Bitcoin just below $10,000. Look at how stacked this is. This isn't a 3-star trade, but this is looking beautiful. So
well, yeah, we got a few more minutes here, Joe. I am gonna have to cut this stream probably in about 5-10 minutes. But this has been great. Like, my last 3 streams, my last 3 trading Bitcoins, we had Socrates on, and we talked about Socrates' indicators that he uses. We had Flip on, and we talked about his indicators, and now we have Joe on. And I just want to point out what you guys have to understand that are watching this channel. I personally believe that you will never be a successful trader following another trader. You won't be. Joe took my course, and some people take a trading course and then they complain for the rest of their life how it was useless. And then people like Joe take the course that spend the next year and a half developing their own trading methods, and that's how you become successful. And it's great that you guys watch these channels, but the goal is to not watch this channel eventually, and that doesn't mean you go and watch someone else's channel. The goal is to make your own trading system. That's the only way to really succeed. I don't think anyone will ever succeed following another trader. The day I stopped following other traders and started coming up with my own system is the day I became a successful trader.
Yep. I it's very rare that I watch or listen to other people. I even remember Peter Brandt was calling a Head and Shoulders back over here. He was calling this a Head and Shoulders, and if I would have listened to him, I would have been expecting a price target of 8,200. I would be wrecked right now. I completely agree with Tone, and his lesson to me is one that stuck. Two things, learn to trade, and um, I ended up building an analysis method, but it doesn't matter how you build your analysis method. Learn to trade. I stopped listening to other people pretty soon after that seminar. But I do respect a number of other analysts. But yeah, I do think there's a lot of value in learning to trade and building a couple indicators that you have a relationship with, understanding how Bitcoin moves. I strongly encourage people to be trading with like a small amount of money. Get used to Bitcoin and how it moves and breathes. Get used to the shakeouts. Get used to all the things that cause other traders to be emotional, so that you can plan on that emotion and counter it. So that has a lot to do with the way I see the market, and that was one of my biggest takeaways from that January 2018 seminar was learn to trade. 2.1 4 million market buy. This is looking strong. I know you don't have much time, and I will be doing a sign off, and I do these videos only looking at trader, so that if anyone is curious about this and wants to see how I have mine set up and designed, how I specifically customized each indicator, I'm happy to do all that, answer any questions. I encourage people to join the Telegram group and ask questions and even recommend implementations. It's been a great community. The programmer is fantastic. There's such great response time to everything. It's been moving, 100 miles an hour. This product from the month ago when I started using it to where it is now, it's already made a world of difference. Now we have an 80 million spoofer at 9,960. Let's see what he triggers. 77 mil insulated by 630,000 and almost nothing. So let's see if the spoofer, let's see how serious he is. He's not insulated by much action here. So I tend to notice that a spoofer is going to pull when they're in danger of getting filled. And that's what's going to distinguish the difference between a spoofer and a serious buyer. But a serious buyer stacking an aggregation with tens of millions of dollars worth of buys is probably not going to get filled. That's way too much. Down to 40 mil, down to 38.29, spoofer gone. So, and now right as he got pushed up against the market value of Bitcoin, he disappeared. So that's what we're looking for in spoofers. That was clearly someone that appeared to be static in nature, pulled, and now we're looking at a lack of support in this region. We do have 2.5. We do have control of one. This is still looking like a bottomy area. One's fluctuating, 2.5 still holding, 5% owned by the sellers. So this is a really volatile area. This is a no trade zone to me right now. So yeah, this is just observation mode. I don't see this breaking down violently just yet. We just had a big move, and I'm not going to panic out of this. I would expect within a number of hours for us to be back into the 10-2 range, probably by the end of the day, 7 p.m. Eastern, UTC -5.
All right, very cool. All right, getting ready to end it here. Hey, Joe, thanks for coming on. It's actually been a great show. We were talking about trader. I guess I could turn on my camera. Wait, what did I just do? Still with me, Joe?
Yep, I see you. I don't see. Yeah, there you go. Looks like you're. Yep, you're
All
up.
right. Driving and streaming, and then never, never a good habit. But yeah, we're gonna end it here. For those of you that are interested in this data set, this is not a trading indicator. It's a data set. One day there'll be a trading indicator. I'm sure Joe will be working on one. Maybe you can make a better one. You have a data set. That data set could lead to numerous indicators. Okay,
Yep.
this is why trading systems are, there's infinite number of them. Some profitable, most aren't. And you have a link in the video description for Trader. So go ahead and use that. And please join us at Unconfiscatable. Joe is coming. Please join us at the Financial Summit in the Dominican Republic or Bali. There's 2 of them this year. Joe will be definitely in DR. I'm assuming you're coming back to Bali because that was just too good.
That was way too good. Yeah.
You can also check out his testimonial on the website. And that's pretty much it. Hey, guys. Also, we are doing the Scammy Awards. Joe, did you vote for the Scammy Awards?
I have it up. I'm gonna when you were showing it earlier, I pulled it up on my Telegram. I'm voting immediately. Can't
Yeah,
wait.
guys, check out the Unconfiscatable Twitter handle. Your votes will count. The Twitter fan votes count for 33% of the final vote. I mean, it's neck and neck between Richard Hart and Craig Wright for Scammer of the Year. It's really awesome. We got other categories coming up, so check that out. And on this note, we gotta sign off. Thank you so much for watching, guys. And Joe, always a pleasure, man.
Always a pleasure, Tone. Thanks for having me on, man.
All right, end the live stream right now. Let's see if I can do it from my phone.